Did Rogan 10-minute daily reality check. Weekend is over. Patrick Mahomes is God. You saw it coming. I mean, you watched that game. You watched the 49ers. You saw that with 8 minutes and 59 seconds to go. They couldn't get a first down, and they could not take time off the clock. And whenever you play somebody who can dominate a game like that and you can't take time off the clock, exactly what happened. Congratulations to the Chiefs. I didn't care either way who won. It's great to see Andy Reid win. And now we can get on with our lives. As all of you know, I've been trading for almost 2 years now. I've been learning a lot. I've been growing a lot. And I use a software which I think all of you need to learn how to use. We've had Jake from TrendSpider, but today I get to have Dan. Dan is like the creator, the master, man. He's like Andy Reid. He's doing the X's and the O's. Hey, Dan, welcome to the 10-minute daily reality check.
Hey, thanks for having me. I hope I can live up to that. You just put me up on a pretty big pedestal.
Did you see Andy Reid when he won yesterday? You see, like, you know, the last minute when Williams ran in for that touchdown, right? You saw Andy's face. That was 20 years of frustration gone. You know, it was.
I can imagine. I missed the whole game. I was driving, so I was on a long drive from Michigan, and it right during the game, which was great because there was zero traffic. Like, nobody was on the road.
Nobody.
All I had was audio.
Yeah, it was great. Even to listen to, it was great. I'm a big rooter of somebody who's worked that hard, because I know what it's like. You know, and I tell people all the time, trading is something that you need to work that hard at to understand. Right? Because once you understand the charts, then you don't realize that you need to go see a therapist weekly, you know, to figure out your demons and everything else. So trading is something that it's the same way. It's like a game. It's sports. It's based on probabilities. It's based on everything. And you guys have leveled the playing field, because when I look at TrendSpider, I see clear, concise charts. You can see highs and lows really, really well. And now you're going to make it even easier. You've got a couple of new things that people can go and use called scanners. So let's go first, Dan, to what you have. So you have the scanner that goes to their own watch list, right? So every single day, I've got maybe 25 stocks, right? That's my master list, from like GILD to AMD to MU to JP Morgan to Citibank, ExxonMobil. So I like to work those same stocks over and over again, because if one of them is running or one of them is crashing, I know what that stock can do. Most of my stocks, Dan, that I play have a 1 to 2 cent spread, so I don't get burned in any direction in a fast move, because I just don't play the Amazons or the other ones, even with options. So how do we set up? Let's say somebody has their basket of stocks, and they're playing, I don't know, the 50 moving average on the 2-minute chart or the 1-minute chart, and they want to get in. You tell me how your scans. You tell me how to set up a scan. You show everybody how to do it.
Yeah.
Why don't you come up with some parameters? Because my parameters are different, you know, per se, just depending. I like the 50 on the 5. You know, because I use the multi-time frame analysis. So if I do a 1 minute, I've got the 5 minute up too, and I like to capture the moves over the 50 on the 5 minutes.
Yeah, gladly. I'd love to show you. You know, briefly before I get into showing you, just a little high level overview of what the market scanner is. I like to say that this is like Google for technical charts. Oh, wow. Right? You can give it your conditions. You basically, in a manner of speaking, you can define what the needle is, and then you can define what the haystack is, and have the software go out into the haystack and find every needle in it for you. Excuse me. And it can do this using a wide range of conditions, and the conditions can be as simple or complex as you need them to be. Right? So it's meant to be just like Google. You can type in whatever your query is, the same thing here. And it's designed also to be simple. Right, so unlike a lot of the scanners, actually most of them in the market today, right, you do not need to be a programmer to use them. You don't need to learn how to write code. You don't have to get fancy. You can just, if you speak the language of trading and charts, you can define a scan that'll search for anything you could possibly dream up. So let me show you how it works. First thing I did is I clicked on the market scanner in the top right corner, right? And that opened the market scanner panel along the bottom. I'm gonna make it a little bigger. It's got this little maximize button on the right just to give us a little more room to work. Next thing you wanna do is pick a scan. So what did you say you did? The 50 EMA, is that across? Or?
Yeah, you know, I mean, what I like to play is I like to play the 1 minute and the 5 minute, right? But when it crosses the 50 EMA on the 5 minute, I'm going to pay more attention to what's going on than the 50 on the 1 minute. So I like to play up and below the 50. I kind of play the 50 as kind of like my line below is short, above is long.
Okay, so super easy to do that, right? You can do, for example, like the 50 EMA on the 1 minute crosses up through the 50 EMA from the 5 minute. You can have other types of conditions where you're looking for price to cross through it. So it's really up to you how you set it up. Here we have it set up where we have the 1 minute 50 period SMA crossing up through the 50 SMA from the 5 minute chart. But you can actually combine any set of time frames you can dream of, right? So this is how a multi-time frame is built into the scanner, right? So you can define your conditions, and then this is your needle. So this is what we're looking for. This is our search query, and you can have as many conditions as you want. I'll show you some more complicated ones too in a minute here. Next thing to do is define the haystack. So we're gonna click on scan through, and here you can choose either your own watch list.
Oh, wow. Okay,
I have a watch list on the right called watch list 1. This is my watch list that I use. Some of these are my positions, some of them are potential positions, some of them are just stocks I'm interested in and I'm following, right? So I can select that, or I can select a predefined universe, right? So we have tons of indice lists. We've got all the NASDAQ indices. We've got S&P. We've got industry-specific lists. We've got all the industrial goods companies, all the healthcare companies, you know, for
utilities,
for example. But you can define your universe. You want it to scan through your own list. I'm going to pick my own watch list there. And the next thing you have to choose is what type of chart you're conducting your scan on. So for 99% of people, 99% of the time, generic open, high, low, close is your standard candlestick. But you mentioned you like Heikinashi, you can scan Heikinashis, or raindrops or line charts. The reason these are broken out this way is Heikinashi charts and raindrops don't have traditional opens and closes, right? Heikinashi uses averages, raindrops use volume-weighted average prices. Generic open, high, low, close is your standard, and line charts only have close prices, right? So you can choose the type of chart you scan through. So I'm just gonna select candles, search my watch list for these conditions, and last thing I need to decide is, do I count the current candle, right? So if I leave this current candle checkbox off, it will scan using the last completed candle, which is 1 minute ago, right? Or I can leave it on and scan using the one that's open right now. So I'm gonna check that out, and I'll push scan, and we'll see if we find any stocks on my watch list where the 1 minute 50 is across the 50, and we did not. Let's pick a bigger list, right? Because my watch list is pretty specific. Let's pick the Russell 2000 and run the same scan on Russell 2000. And you can see how this is working now. This is scanning through 2,000 tickers roughly, although it's not exactly 2,000 tickers in the Russell 2000. And it's generating a results list here on the right, right? And these are all the symbols from the Russell where the 1 minute cross up through the 5 minute. Oops, I meant to select 1 minute there. And this is real time. So this is updated as of right now. And you know, you can pull up that chart and take a look at it, and you can add those indicators to the chart if you wanted to have them on there. Now, let's say I like this scan, right? So I've scanned the Russell for these conditions. I like the scan. I can give it a name. So we'll call it 1 min, 5 min, SMA cross, Russell 2K, right? You can call it whatever you want. You can now hit save here. And this watch list is now saved. Right, so now I can pull it up here, just like,
there it is.
Where? I don't see it.
Right there, top. 1 minute, 5 minute SMA cross.
Oh, sorry, I'm blind. Right, I'm completely blind. And then when I pull this up here, you can see that this watch list is now populating on the right here. So I have the scanner closed. I've defined a watch list based on my conditions. I can get a preview of those conditions by clicking the eye here, which will show me the condition that it used. So I don't have to pull up the editor each time. And I now have a watch list that I can pull up and use my keyboard to flip through and do whatever I want to do with them, be that set up alerts, or whatever. So that's basically the gist of it, right? You can define what you search for, you can tell it what to search through, and you can define how current the results are, and generate a smart watch list in real time based on the conditions that you're looking for, which should save you a lot of time, especially if you have a specific trading system that you apply.
That's it. All right, show me one more thing where you go, because when you showed it, the pictures were of my face and your box was doing it. So where did they go in the corner to start? Oh, there it is, right there, market scanner. I see it.
This button
Okay.
just turns
Yeah,
it on
I didn't
and
see it. Yeah, that's what was covering it. So it's just basically market scanner, and then create any one of these things. I mean, we can create, oh my God, you can create.
you can go very fancy with this.
You can
so
go,
just so you know, the system will come with 30 pre-made scans. So we've developed 30 scans. There's an article on our blog, or in our documentation, that explains each one of them, right? And they're all tagged with this tag shared, so you can click on that in my account. You can see all of the scans the system comes with out the door. And these can get really fancy. For example, this is a TD sequential pattern. 9 candles in a row, each one closing lower than the one 4 before it, right?
Oh, wow.
So you can build this out pretty easy. This is actually one of my favorite scans to use. But it's by no means even close to the most complicated. We have these ones called spider scans, which are experimental ones, and we give them a cheesy little name. But these can be very sophisticated. So for example, this one is looking for a 9-sequence TD sequential down, but then it's also looking for the candle that's forming right now to be a bullish candle. So it's looking for a downtrend that's ending with a bullish hammer, or a bullish engulfing, or a bullish harami, or tweezer bottoms. And because current candle is checked, it will search in force. So it'll try to find anything that this is happening on right now.
Wow, this is great. So you're getting the things right off the bottom when they're turning.
This is the attempt, what this scanner is designed to do, yes. It's designed to kind of find a reversal point, right? So it'll generate the watch list, and you can just flip through the charts in it. And you can see here it's finding, I believe this has a doji in it. Yep, so it has a doji parameter here. It's finding a long downtrend, ending with a doji right now, right? We have other versions of this.
This one, wait, then you can flip it, because that's showing up on the daily. Then you can flip it to the 1 minute and see if you can, day trade that stock right now while it's making.
Bingo. I'm much more of a swinger, so I don't day trade at all.
Okay.
I hold things for a few weeks, a few months. I tend to, buy for a longer term. But yes, that's how I would use it. And actually, I would find it on a daily and weekly, and then I would go down to the 1 hour, 65-minute chart, and use that to time my trades. So here's an example of a very complex scan. This again, a lot of our spider scans use the TD sequential pattern, so it starts with that. 9 candles in a row, each one lower than the one 4 before it. Then it wants RSI to have been oversold at least once in the last 5 candles, right? So it's looking at candles 1 through 5, and it's making sure that the RSI was below 35, right? And it's looking for any of these to be true. So just one of these needs to happen. And then it's looking for RSI to start an increase, right? So price is going down, RSI was oversold, and now RSI is increasing as price decreases, right? So here it's looking for the RSI 1 candle ago to be above that of the one 5 candles ago, and the one 3 candles ago to be above that of the one 7. It's a looser condition.
Now, obviously, 1 second, I got one quick question, okay, because this is really good the way you're explaining it. So a lot of these stocks, some of them are thin, some of them, once you go through it, how do we eliminate the ones that have that are painting bars as dashes,
So you can add a volume parameter, right? So you can just go here, go to conditions. This is a daily scan, so we'll pick the daily time frame. You can go to indicator, volume, and then you can say volume is either above a constant number, so you can put 50,000 or whatever, right? Or if you want to get fancy, you can say the daily volume is above the daily volume moving average for the last 20 periods, or the last 100 periods, right? Or you can add both. So you can add high volume above 10,000 shares a day or an hour, and the above average volume right now, right? And this will probably reduce down the results in our scan here. It's unlikely that, we only had one result to begin with here, so it's unlikely that that result will also have this volume condition on it. But, you know, that's how you would refine this. And we actually have a few pre-made scans, if you search for this, called Volume Rush, right? So this is a scan that looks for abnormally high volume on a particular symbol. And you can then add and customize this however you choose.
God, it's amazing. I mean, you could just go
And if you notice, this condition is the 5-minute volume is above the 1 hour volume moving average. So that's a big spike in volume. Price has increased 2 candles in a row. So it's a tight scan. You might not find many things on it, but then you can just go in here and refine it. You can say, okay, maybe not against the 1 hour, but what about the 30-minute chart? You know, do we have any charts where the 5-minute volume exceeds the 30-minute? We do.
Main.
So, and then we can look at this one and see, you know, it is also kind of pulled back. This condition doesn't look for the pullback, but it's pulled back and it started to kind of form a doji here. So it's a really fast way to search the market for whatever you would normally look for on the market by hand, right? And in doing so, you save yourself a lot of chart watching. You kind of front load your work. You know, you spend the time building your scanner to find the stocks that you might be interested in. And then you don't have to ever, you know, look at a scanner again, right? You just have a watch list that's ready for you to go.
That's amazing. I mean, it's amazing. And you're using the cloud up there, right? Is it the cloud?
Yeah, I mean, I guess that would be the term. Most of the heavy lifting that TrendSpider does takes place on a server. So not much of it's happening on your computer.
No, on your chart right there.
Oh, right. Yeah, sorry. Yes, this is the Ichimoku Cloud. It's a modified version of it. I don't really use it to trade much. I'm much more of a divergence trader. Like, you know, my charts look like love here, right? Like this is actually a trade I'm in here, right? Where you had, you know, slight divergence, accelerating divergence, a break through a trend line, a break through another trend line, and then a continuation, right? Actually, this is approaching my profit target, which is this anchored VWAP right here, this orange line. But yeah, I use the cloud to kind of gauge if it will pull back. You know, clouds are usually a place where it might sell out for a bit, you know, and it kind of gives me a chance to measure risk and things like that.
Great short when it's below the cloud. Look at that, huh?
Oh yeah. You see that a lot of charts, but you also see once it breaks through the cloud, right? A lot of really powerful moves. This is one of the most beautiful charts I have right now in my account. Look at this inverse head and shoulders that you have here.
Yeah, look at that. Wow.
1, 2, 3, and then you have this consolidation. So I don't actually know. This is actually how I trade. So this is a stock I'm watching, right? I don't actually know which way this is going to go. I suspect it will move. It'll break out and move up, right? But I don't know. And I think, I mean, if you look at how far this thing has moved, I mean, this is a massive move from $18. It's essentially double at today's price. So it could be a powerful long or a powerful short. And I don't really want to speculate. So this is how I use TrendSpider. Like I found this using the scanner, right? I like the chart, but I'm not sure I want to trade it just yet. So I've created 2 alerts, right? I have an alert right here at 35.51, and I have an alert down here on this 236 fib level, right? And you know, if it decides to break out of here, awesome, I'll long it. If it pulls back here and you know forms a hammer or something or some kind of bullish candle, you know, I'll consider that a fake out breakdown, you know, and I'll possibly long it. And this alert will become my new stop level, right? And if it breaks below this alert, I'll possibly want to buy some puts on it, right? Or short it, right? And since I don't know which way it's going to go, right, I can find stocks with my scanner, right? I can analyze them with auto trend lines and auto fibs and the various TrendSpider features that are there, and the 2 indicators that I use. And then I can set up alerts on the levels that I think matter the most. And I can go about my day. Right, I can do calls with David. I can, you know, drink some coffee. I can relax. I can do other work because I know that the system in the cloud at Amazon and the servers is sitting there watching the charts for me and will let me know when anything I care about happens. Right. So the scanner has really changed how I trade. Like I trade pretty often. I do all my homework on the weekends. So Sunday afternoons when my kids are napping, you know, that's my time to sit down and chart. You know, I set up all my alerts, and you can see in my alerts panel, I have 58 active alerts right now. So I'm watching a lot of symbols, right? And, you know, then I just go about my life. Some of these alerts I created a while ago, you know, a while ago, like this one right here, like, you know, I could be interested in this if it breaks into this gap, right? It hasn't been able to do that. So I haven't actually paid any attention to this chart. And by doing it that way, I save myself.
how did you find, was this a scan that brought you to Maxar to break?
Yes.
So basically you're taking a look and seeing once it breaks into that gap, you want to get the move from 21.24 to 26.46 roughly.
That would be my play there, yes.
That would be your play. So you're watching it and it's heading there. I mean, obviously, I mean, look at it.
But my play may also be, you know, to play a run up back to this level. So depending on how far it pulls back and what it does, you know, like, you know, if it were, and I don't have this one set up this way, but like if I put an alert on this lower Ichimoku band here, which you do just by right clicking on the line. So I right clicked and it went to create an alert, right? And I usually like the bottom alert to have some buffer on it. So I'm gonna give it a little bit of a buffer zone here, call it about 8 cents. Or no, I wanna go bigger than that. So call it about 40 cents, right? And I want to know intraday when this happens. So this alert will fire when the 15-minute candle breaks through, touches, or bounces this buffer zone around this lower Ichimoku line, right? And I want to watch it for at least a few weeks, right? So my play here is either play the gap fill, right, or play the run up back to the gap, because that does happen quite a bit, right? Like gaps can form powerful resistance or support, you know. So you know what, it takes a lot to break into them, you know. So sometimes I like to just set it up this way. And this is a setup that I have a number of charts that kind of look this way. I'm trying to remember which one it is.
So you're not a moving average guy, are you?
No, not at all. Yeah, so BBio is another one where we have this type of setup, right? I tend to use very few indicators. I use a PPO and an RSI to measure momentum, right? So and on the RSI I only look for divergence, right? Which you can see I draw my divergences on it. But that's the only thing I look for when I trade is divergence in the RSI and then the PPO to confirm it, right? So you have here bullish divergence on this stock, right? And then PPO crossed up a little bit after, which confirmed it. And you know, this was the move up, right? I have Ichimoku because I do think that the cloud can form a pretty reliable support and resistance when price is interacting with it. And I use fib levels, right? Sometimes not in this chart, but I sometimes use fibs. And I really, really love anchored VWAP, which is this blue line here that I have this alert set up.
Here's my question, okay? And it's funny, how do you get to the anchored? Because I have VWAP in there already on my chart, right? And then I keep trying to get to the anchored VWAP, and I can never get to it.
Sure, let me take the cloud off my screen. It's sometimes just so annoying. So anchored VWAP is the easiest thing in the world to add. All you do is you right click on a candle. So this is SPY Daily. I'm gonna right click at the low and click on create anchored VWAP here, and boom. And look how powerful it is. Like you could have created this anytime, right? But when SPY pulled back sharply in summer of 2019, right, it pulled back directly to that anchored VWAP line.
Show me, can you show me this on a 2-minute?
Yes. Actually, I don't know if we have, yeah, we do have 2 minutes. So Brian, the first time you do it, it'll give you a link to Brian Shannon, the guy who invented its blog, where he'll talk about how he recommends you use it. But there you go. Boom. Plop at the very bottom here, and look how it's been respecting it.
Wow, right? look at that long, and look how close it came in.
And then look at this. You anchor it again from the gap up, and look how it's respected it on the upside and the resistance side. Right. These are unbelievable.
How do you decide, Dan, what your anchor points are?
So Brian has a great article. The first time you create one in TrendSpider, I'll give you a link to it, where he talks about how he recommends you do it. Basically, it boils down to, we call it a status quo change. So a major high, a major low, a gap, right? A giant candle. You know, anything that seems like it's blown through a ton of stops or limit orders. You know, like when you have a major move or a key point. Like on this chart, I would anchor up here. I anchored down here. I would anchor at this gap. I would anchor at this gap. You know, and I'd probably anchor, oops, I put that in the wrong place, but whatever. And I'd probably anchor at this high, right? And then I'd look at it and be like, okay, which ones do I think are most reliable, right? Right here, you know, seems like these three are the ones that it has respected the most, right? Like price gap directly above this. This has served as support and this has served as resistance. So I would probably even get rid of like this one, because these sandwich the price the most. And then here's where it's really beautiful. Like, let's say, you know, you think there's a big move in SPY, but you don't know which way it's going to go. Create 2 alerts. And you can't do it on a 2-minute chart, unfortunately, but on a bigger time frame, create 2 alerts to sandwich it, right? So the system can watch those levels for you and let you know when, you know, it's picked a direction. So you're not stuck playing the chop. Or play the chop with 2 alerts on either side.
Well, I mean, it's a great chop trade right there, because then once it hit the anchored VWAP, you've got a reversal candle sitting right there. And
yep. And I find, here's another thing to note, these fully support multi-time frame. So when I plop an anchored VWAP on the 5-minute chart here, that's the same anchored VWAP there, right? When I flip back down to the 3-minute chart, it will stay anchored to the same point, right? You can see that. So it's naturally built in. You don't even have to have MTFA turned on. It's simply going to anchor from that point on that chart, no matter what time frame you're on. And this goes in reverse too. I anchored off the 5-minute, but now I'm going to the 15-minute chart, right? And you can see how it's still there, right? So it's a really interesting way to kind of measure the status coaching. The other thing that I want to highlight, and it's related to anchored VWAP, is anchored volume by price. Are you familiar with that at all?
No, you got some really interesting stuff. I mean, I can tell you what I use afterwards. I mean, but
okay. So I'm going to anchor a VWAP on this bar here, this gap in January 27th. Then I'm going to turn on an indicator I have called volume by price, right? And I'm sure everybody's seen
I saw this before one time before. Explain this to people, because this is really, someone taught me this about 2 years ago, and he swore by it.
Okay, so here's how this works. Your traditional volume bars, the ones at the bottom of your screen, most people, they're green or red, right? Give you volume by time. So today, this hour, this 15-minute candle, here's how many shares traded hands. Volume by price is the exact opposite of that. It gives you volume by price level, right? So this is the most popular price that people pay. Anchored volume by price, and volume by price is an indicator that's commonly available on pretty much any charting platform, right? So I don't want to pretend that is anything special on its own. Here's the TrendSpider spin, the twist, right? Most systems either give you a specific volume by price, so you got to remember it's a time-sensitive thing, so you got to pick a point to measure it from. So most of them will measure it with what's available and visible on your screen, right? They call it volume by price for visible range. TrendSpider's volume by price is different. It is anchored, and that means you can tell it where to measure it from. You can take this vertical line and drag it on your screen and say, I wonder where the price of trades was distributed from this gap down. And you can see these are the most popular price levels from this gap down, right? I can move this to the most recent high. And you can see that this price, there's a lot of accumulation that occurred down here, right? At these super low price levels, right? And you can keep experimenting to see where the pressure is, right? Where were the buyers? Where were the sellers, right? This gives you an idea as to what price levels they're watching. Does that make sense?
Sort of. Okay, so
let me add.
It flipped around a couple of times. So I want to kind of.
Yeah, let me add 2 things to this. So I'm going to add these 2 checkboxes called the VWAP and the point of control, the POC, and it's going to add these 2 lines to my chart here, right? So just note the purple line will fall on whatever bar here is the largest. This is your most popular price as of this date and time. So starting January 27th, more trades took place on SPY at 324.13 than any other price, right?
Below it's a short, above it's a long. I mean, you could just look at it.
Yes, this is where the volume is holding, right? And you can see this is where all the buyers were, right? But this is measured from this point, right? If I change this and measure it from this point, the most recent peak, you can see how much accumulation occurred at the very lows here, right? It peaked, sold off hard, and people bought it up right down here at 321. There's more volume and transactions here than anything. This yellow line is your volume weighted average price, also as of this point, right? So you'll notice if I plot a VWAP here, it's going to go directly to this line because it's the same calculation. The anchored VWAP is how this developed over time. This was the volume weighted average price as time progressed, and here's where it is right now, right? And that's why this orange line and this blue VWAP line connect, because they're measured from the same point.
So when you flip it around, it's not moving on its own. You can change this volume, these side volume bars.
Yeah, you drag and drop this just like a file on your desktop. Just click and move it.
So that
Right.
thing just goes. So right now, let's go to a 2-minute chart for a scalper, right? And see where the action is on the SPY.
And it is above you. The most popular price right now on SPY was 325 since it gapped up.
What a great short.
Since it peaked and has pulled back, however, you have a ton of accumulation occurring down here, right? And this is how I like to use this, right? Jake uses this differently than I do, but I like to use this where I move it to the right to major points so I can see what's been happening lately. Like here, I would start here. Okay, or actually, I would start here. This is the low. So how is price? There was a lot of volume down here. Holy crap. Okay, then price gapped up. So people started accumulating hard, right? Okay, so then after it gapped up, what happened? Well, after it gapped up, it moved up pretty fast on light volume, and there was a lot of accumulation up here, right? It popped over this. It actually made a divergent high here, right? And then it's pulled back to the anchored VWAP from the most recent high, right? So pulled back basically to this level. Okay, to me, that's bullish. Now I want to know what's happened since that bounce. So I'm going to move this to this bounce right here. And now I can see that actually volume accumulation was below where it is trading right now. So I'm going to be watching these levels here, that they're very close together, this 324 range. And I'm going to be thinking, you know, in the short term, because we're on a 2-minute chart, you know, probably bullish above this, bearish below this. I'm also going to take note of this gap here. You see this really low volume area at 324.53.
Mm-hmm.
I might even do it now. Price will glide through that like a warm butter knife, right? There's no support or resistance here in the short time periods, right? So it's like a gap almost. It's a volume gap. If you see this on some charts, like, remember, gaps can be crazy support or resistance. But if you look at like this piece of crap stock, this penny stock called MPEC, right? It has never once in its entire public company history traded a single share in this price range, right?
Look at that.
I'm sorry, or this price range up here. Sorry, I was zoomed in too much. This one up here. So I've been watching this one periodically. It's definitely not going up here anytime soon. But if it ever breaks into this gap at $1.50, it could be a really smooth, fast ride up to $3, right? It could be a quick 100% banger, right? So I'm watching this in case it ever gets up there. And you can see what's happened here, right? Like since it's crashed, sometimes I have a hard time catching this. A little tip, the words VWAP start are where you drag by, right? But if you put the thing right where it gapped down from, right, we can disable the log scale and just zoom in. You can see how there was a shitload of accumulation down here in the 50-cent range, and then a gap down, right? Well, now it's gonna have to fight through this. I mean, imagine how many bag holders are sitting at this level, just waiting for it to get back up to 50 cents so they can dump. You know, this is the most
Wow, what a great short at 50 cents coming up.
Yeah, no kidding, no kidding. Although I don't trade pennies like this.
No, me either.
I hold a couple, right? But those are things that like, am I like 10 years from now, this is either zero or worth $20 type of things. But I absolutely adore this feature because it gives you visibility that most people don't have. Like lots of people have volume by price. They can see it for whatever candles are shown on their screen. They have no easy way to control where it goes and where it measures from. And this indicator is only useful if you measure it from the right points.
Go back, Dan. Go back to the SPY one more time.
Of course. I just pulled this one up because it has that massive gap. Right.
Yeah, and a lot of people will trade it, you know. So go back to the SPY, not on the daily. Go back to the 2-minute on the SPY. I want to walk through this so I understand it perfectly. Okay, so then we take it and we go to that swing low down there, right? Or this anchored VWAP's there, and then we go to the volume.
So anchored VWAP right now is set from the two most recent highs, this high and this high.
Okay.
Right. And you can see what happened. Anchored from this high over here, and eventually when price gapped up, it gapped up directly to it. The low here touches anchored VWAP. Rallied to this divergent high up here, right? This is RSI divergence you have down here, right?
I mean, look at that short. Look at the hanging man right there. Go to that short when it touched the anchored VWAP for the second time on the retest. Look at that short.
It's incredible. And here too.
That's insanely easy.
The anchored VWAP, if you learn how to anchor it and use it correctly, it can be the only indicator you need.
Oh, I can see
Brian
that.
Shannon has nothing He doesn't have volume on his charts. Like he literally has candles and anchored VWAPs. And that's how he trades. And he's a master at it. I mean, I have a ton of respect for him because he's simplified a system that works really well for him. And he's developed an indicator that others can use to do the same. And he teaches it too. So for people who want to learn anchored VWAP, Brian's a good place to go. But yeah, man, I adore this indicator. I mean, this is also like a beautiful bull flag. You don't even need to draw it. Like the anchored VWAPs draw it for you.
No, and it's funny on a day like this. I mean, you all, we both know when the market gaps up ridiculously like it did. I like to play the pullbacks. I like to short. What I like to do is short that secondary move. That one that I just found the hanging man at.
You may have a third one here right now. I mean, look.
Yeah, we do.
It's struggling. And here's the beautiful thing about this, right? From this gap to today, if it breaks this lower AVWAP, it's going to fill this volume gap here.
Oh, it's going to go right down to that gap at 322.
Yeah, and there's a ton of volume holding right here at 321, which can be a great long point, right? But this is a price and volume gap, with no trades that have occurred here for, since it started to recover, and this is an important point. So I think it's fascinating. Okay. This is one of my favorite indicators. The other thing to note is when these indicators are added to your charts on TrendSpider, you can create alerts on them. You can scan using any anchored VWAPs that exist, right? So if you go back to like on a monthly chart, anchor a VWAP at the beginning of time or the IPO date on all your stocks and watch lists, you can scan those anchored VWAPs, right? You can also back test them. So if you've anchored them a while ago, you can back test what the strategy would have performed if you played bounces between two major ones going back a long time.
Can you, Dan, go to one stock? Can you go to AMD?
Of course.
Let me take a look at AMD because I play AMD a lot.
Okay. This is the 2-minute chart. Is this the time frame you want?
Yep, 2-minute chart. So anchor. So we had a reversal. We go to.
Right, I would anchor it to obvious spots. So this low down here. Below. Right. This high up here.
And then that high up there, right?
Yeah, this high seems really interesting right here. I mean, look at how it respected it here, peeked over it a few times, right? But couldn't stay over it, pulled back, and now it's tested once, twice, 3 times, right? So you've got a important level right here, right? There's also a gap right here, so you might want to anchor from that gap, give you a slightly different calculation, right? But what I would recommend instead of anchoring it on these low time frames is anchor it on a bigger time frame. You will do better if you're trading 1-minute charts if you anchor off like a 5-minute chart. Right?
So let me say, so we anchor it down below right around 46 and change, right?
I would if it were me, I would go through it and anchor at all the major status quo changes, right? Zoom out a little bit. Oh, look at this. This is a crazy chart, I mean, I personally, I think the longer, the better, right? So, maybe pop up here, to the 65-minute chart. I mean, look at this. Look at this pullback directly to this anchored VWAP, right? So I'd anchor it in a few places that seem to make sense. I would go down to my trading time frame. I think you said the 2-minute, right? And from here, I would eyeball, I'd be like, okay. Looks like these are acting as good support right here. This one's kind of far away, so I drop that one. And then I pick the closest one, and this would be a support level to really watch. The other thing a lot of people like to do is they anchor from the most recent touch of the last anchor VWAP. So that would be here. So you could, So you could anchor another one here, and you can see where that goes, right? You can see how that looks right there. It's pretty crazy.
All right, so this is interesting. Okay, so because I've been, moving average, and all this other stuff, and you're showing me this, and it's like, it's pretty much so much easier. And also, I've been doing this 2 years. The cleaner the chart is, the easier it is. When you got 700 lines going all over the place, it looks like a spaghetti factory, right?
I completely agree. I can't stand dirty charts.
What else? What would you use? Okay, so you got anchored VWAP and stuff like that, but let's say you're scalping. Would you throw a 20 in there? Moving average.
I don't use any moving averages. I would throw an Ichimoku cloud up, right? I think Ichimoku cloud can be a clear signal at times, and I mean I look for divergence. And divergence is like, it personally, like this is my style of trading, right? So I don't know if this is going to work for everyone else, but divergence is like the best tool I've used, right? Like for example, like look, I mean, you have a simple RSI 10 here, right? You have price make a very sharp low after a pretty long downtrend, and you have RSI pop up, right? Well, that's a pretty strong divergence. You have the PPO break up and retest it and stay above it for a little bit, and you have this massive pop that occurred here, right? So like I would look at this type of thing and know that it may not play out instantaneously, but divergences do tend to play out, especially on longer time frames, right? I'm not a scalper, so like I have no idea if this works in scalping or not, right? But like if you look at some of my longs, right? Like this is my favorite one right now. I think I might have showed it to you, but it's Love, LOV, right? Like this was an easy trade for me. It was extremely easy, right? I had an alert set on this line right here, this downtrend that I'm kind of moving my mouse around. I had watched it and seen it form several divergent lows here, right? So it formed this divergent low here, and then it went down even a little further, and the divergence accelerated, right? And then it broke through this trend line, which got me really interested. And then when it broke through this line, I longed it. So I've been long this basically immediately since this break, so about 5:30-ish, right? It's trading at 6 now, right? And it's approaching my stop loss, which is, or my profit target, which is this anchored VWAP from this high all the way back here, which has confluence with this downtrend, right? So, you know, the downtrend, which is connecting two peaks over here, right? A natural, simple downtrend trend line, and this anchored VWAP connecting at the same point tells me this is probably pretty strong resistance, and I'll probably get out of this today or tomorrow, right? Or move up a stop depending on how it closes, right? And you know, at least control the risk in it somehow, right? Because I do believe if it can get above this, it can go further. But you know, I'm going to start managing the risk and being very careful with it pretty soon here. And it's a very simple trade, right? You know, all I'm looking for is a divergent low and a breakout of a trend line. And, you know, I want to know what the next strongest level of support is or resistance is, so I know how far it's going to go, right? So that's my style of trading. You know, I look for divergent lows on everything. You're an NBEV, right? So let me pull up NBEV here because I'm in NBEV as well, right? You know, and here on NBEV, you do have divergence, strong divergence. You had this then pop here, which is what actually caused it. And my stop on NBEV is this lower low, right? I don't want to ride this down, you know, as it becomes a penny stock. I've seen a lot of pot stocks do that.
Yeah, and me too.
Right, you know, and I actually bought a few and rode them down and was not happy about it, you know. So I'm very careful from now. So this is my stop here, right? I don't have a firm profit target on it, but I'm definitely watching this upper trend, right? Because you can see how hard it has been for price to get over it. You know, touch, popped over it, briefly pulled back, direct hit, right? And now you have some Ichimoku clouds, you know, right outside it, right? You've got a lot of reasons to think that price is going to struggle to push through here, right? So, you know, I'm not looking at this as a breakout play. Like I'm kind of with Jake, where I think about, you know, a little over $2, 210 is probably the most we can hope for out of NBEV. But I'm also, you know, pretty bullish on it because it does have this strong divergence, right? PPO did confirm it did have this massive candle. It just doesn't have a great track record with massive candles, right? You know, I bet a lot of people saw this giant candle back in October, got super excited, right? And, you know, thought it was just consolidating, and then it's another 40% down, right? So, like, the pot stocks can be iffy. But if you look at the divergences on these and you look at them on the longer time periods, you know, like on the weekly chart, this is my weekly NBEV chart, right? You do not have divergence here, right? So that tells me it's probably a short-term play right now. You also have this weekly orange trend line here. It's curved because it was drawn on a traditional scale. So it wasn't drawn on a logarithmic scale. So it's straight here. And on the log scale, trend lines are curved. But this is your normal trend line that 99% of people would draw on this chart, right? It's also coming up close and you're getting tight to it. And you're also in a logarithmic trend down as well, right? So NBEV makes me nervous, right? I'm still long it. I don't know for how long. If it makes me too nervous, I may cut it. because there's also a lot of really nice charts like Love that I'm much more comfortable with.
Oh, there's so many better things to play.
Yeah. Now, what I do like about NBEV is it has potential for a parabolic move, right? Like if there's some good pop industry news around beverages or something they're involved in, right? If you get some hype somehow and break out of this log trend and break out of this traditional pink line, right? I don't see a ton of resistance for this thing for a while, right? Like there's an anchored VWAP in the way, but it's also up in the cloud. Like it's got potential to run, you know, possibly to the $3 range. So it's, you know, a high risk, high reward type of setup, right? And then also you do have this $1.30 level here, which was a major low in the past, right? And if you flip on the volume by price, you'll see what a disaster it'll be after that.
Oh,
right?
It's dead.
Because there's no volume, like none.
None.
So when the price ultimately breaks down here, right, it's going to crash. And it's going to crash really hard, and it'll be a penny stock. So that's what makes me nervous about it. You know, I tend to play some pretty high risk setups. I wouldn't recommend this to like somebody necessarily. You know, I do think it's an interesting setup that has some potential, but it also, you know, I'd say the odds of being wrong are higher than the odds of being right on NBEV here.
You know, turn on the volume by price again. I want to show you that what my eyes saw that was really interesting. Look at that short at $5. I mean, that
up here,
the retest. Yeah. Look at that. Look at it right. Go there. Go to 5, and then look at $5 the last time it made its way. You know, played around $5 somewhere in May.
Oh yeah, here you got it.
Right there. Look at that.
Yeah, and here's what makes another. I'm happy you reminded me of this. Here's what makes me really bullish about it. Look at all this accumulation down here.
Tons.
Right. This actually goes back further, right? Like, watch what happens. Like, I forget exactly what point this happens in, but as you're moving this to the right, you know, this accumulation starts to move lower, right? And as you move it here, you know, you see it start moving lower and lower, right? And at a certain point, like, there we go, it's somewhere around here. Probably this big candle, right? Nope. So it's like right here. Like, look how all the average lines and the V, it just drops, right? It goes from here, where the most popular price was $5.29, to the next week, where the most popular price is, you know, I mean, obviously this played out over time, but, you know, there was no real buying anymore, right? There was only selling. And all the accumulation has now, since April 22nd, has really been at $1.87 range. And it's only traded there since December 9th, right? So there's been a ton of new money coming in to buy NBEV, accumulating it at low prices. And that's what makes me interested in bullish in it too, because the next highest volume level is all the way up here at $5, right? So like it has potential to fill this volume gap. And if it can run up to 367, right? Which also, you know, is not like the clouds somewhere before that, but, you know, that gives me some hope. Because it's obvious that there's a lot of people who see value right now and are picking up shares, right? Like there's just a lot of transactions. It's the most popular price down here, right where it's trading right now. And as you move this further to the right, you know, you just see that continues, right? Like it's the lower the price, like the more people are swooping in and buying NBEV. Yeah, right? You see this on the lower time frames as well. So like you can go down to like 65-minute chart, right? Zoom out a whole bunch here. And you can stick, you know, this somewhere around here, wherever you want. This is the major sell-off right here, right? And you can see how this looks here, right? And I mean, this looks nice to me. Like it's entering this short-term cloud. There's a lot of accumulation down here, you know, like, you know, and if you zoom in, these volume days are pretty high as well. So that's a lot of volume on a day and a lot of it concentrated at these prices. You know, that's potential too.
Fascinating the way that you do this.
Yep.
Because
and the other thing I look at that's worth looking at here are raindrops. Do you use raindrops at all?
I have not used it. I'm more hiking Aishi and
okay.
and rain and you know 5 to 20 range bars.
Yep. So if you like Heikinashi, you'll probably like raindrops. They're like Heikinashi. They're not smooth like Heikinashi, but they're adjusted, you know, in a similar kind of way because they don't have traditional open and close prices, right? Instead, And this goes along with this volume profile. Instead, these are like mini volume profiles on a per candle basis, right? So if we go down to the daily and we pull up our good friend NBEV here in the daily chart, let me turn off all my drawings and all my indicators to make it nice and clean for you, right? Each candle here, each raindrop is essentially a volume profile for that day, right? So this, like, let's pick, let me stick an arrow on, I don't know. Let's pick this big green guy right here, right? You see this guy?
Yep.
Right, so the raindrop represents the high-low range of the day, just like a candle, right? Just like a candle. But the dashes are not the open and close. These are the volume-weighted average price for half of the day. So the left side is a volume-weighted average price for the first 3 1/4 hours of the 6.5 hour daily trading session, right? And the right dash is the same thing for the second half. Their position relative to each other gives them their color. And then the blobs indicate the actual distribution of the volume, right? So where were the trades being placed, right? What were the most popular prices? And you can see this is a pattern we call a flip, right? Where initially it flips up and then it flips down, right? It's a double flip. And you can see in the flip down, it's kind of like an upside down balloon. All the volume's concentrated at the bottom here. And there's no volume at the top at all, very little, right? That's a very bearish pattern. And you see the continuation down right here, right? The blue ones form, and they're rare. Blue ones are 4% of all raindrops, but they form when the VWAPs are at the same level, right? And that's a true doji, if you think about it, right? It's a true point of indecision. And it's very rare, and it's powerful, and you see them often at top and bottom ticks. I mean, here, you saw one, it rallied a bit, blue raindrops sold off, right? And it had a few along the way, but then I had another one form down here, and then it popped back up, right? So they're really interesting. And you see them clustering, and you can see how rare they are, but you see them kind of clustering at lows and highs, and other points where the market may be indecisive along the way. And you see them along the trends too, right, in the channels.
Pull up the SPY on that.
Of course.
Let me see if I'm going to guess. I have a mental guess of where one is.
Top tick 1,
Yep.
top tick 2.
Yep. That's what I was, that's the week of January 20th almost, right?
Yeah, and look down here, this big base of consolidation, right? You could draw a box here, and these would form near the tops and bottoms of the box, but you see them all clustering here. Clusters of blue dojis form in bases, and those bases tend to be very strong, right? So, you know, that's interesting. And you won't see them as like all the time on something like SPY. The more liquid the asset, and SPY is super freaking liquid, the harder it is for a blue raindrop to form, right? So the more powerful it is. You can like look at like Amazon or Google or anything, anything super liquid. You're not going to see a ton of them, but when you do see them, you should pay attention to them, right? And you can see like there was a top ticked one here, top ticked one here, you know. You had some consolidation areas here, and actually if you drew some trend lines here, these would be forming on those lines. The trick, and this is something I always tell people, is these are really not directional, right? They imply upcoming volatility. They don't tell you anything about the direction it's going to go or when it's going to happen. So like I think it's always helpful to use them as a confirmation thing, right? Like I've got another reason to think price may bounce here, and then a blue doji forms, and then I'm like, okay, that might, you know, be the sign. And especially if I have like an AVWAP and the blue doji like was right under the AVWAP, right? You know, that might be a sell signal for me. I think there's a blue doji in FNKO. This was a crazy trade where AVWAP got me right out at the perfect moment. Look at this. If you anchor it from the gap down, this blue doji, or this high, you get this AVWAP range. And I was in this trade. I've cleared my chart since then, but I had some trend lines. I bought it somewhere around here and wrote it all the way up here. When I could not break through this AVWAP, I sold it. And look what it's done since then. It was an amazing trade.
It's amazing to look at like how simple you have, you know, because you came up with this, you know, so it's interesting when you talk to somebody who came up with the software and came up with the idea, how simple it is that you actually trade. Because the longer I'm in this, and you know, and this is all just an algorithm bot game anyway, right? You want to figure out where they're buying and where they're selling, right? So it's amazing. Like the more I talk to people who are in it, the less they use traditional stuff, and they're using more of anchored VWAP, they're using more of, you know, prior level, you know, they're not really looking at the 20 EMA and going, oh my God, over the 20, it's like, I gotta buy. It's like, they're looking more at these like.
No, very few of the, I mean, I'll tell you, man, like the simpler the chart, the more effective the trader tends to be. That's something I've noticed. This is a cool scan, by the way. This is a bearish double inside bar breakdown. These double inside bar scans are so much fun. Right? Basically, it looks for 4 candles, one with a wide range, the next one to be completely within the range of the previous one, and the next one to be completely within the range of the one before. So a triangle-shaped consolidation, right? And then it looks for the next candle to have broken the bottom of that middle candle here, right? Which is what we have here. And you can see what a perfect short this LB scan. This is the only thing that came up for this, right? And this scan.
Okay, so now take it. Let's pinpoint the entry. Take it to a take it to a 5 minute. Now we know the level the day before was 20 something and change. You know.
For me, what I would do is I would put a line here, create an alert on this line, make it a breakthrough alert, set it off on the 15-minute chart. 15 days. You don't know how long it's going to take, and wait for that to happen, right? And wait, and then potentially sell to open that alert, right? So I would do a lot more homework on this before I would do that, right? Like, just to be clear, I wouldn't do this because I don't see a divergent high here, right? So what I think will likely happen here, this is my guess, is it will pop back up before it goes back down, make another high, and that high will have a lower RSI reading, which will be a signal that I look for, right? Like, I need that divergence. I won't trade without it. And then also the PPO will likely start to roll over a little bit, which will confirm the divergence, right? So for me, that would be the way I would look at this, is I'd say, okay, this is an interesting setup. It's not divergent on the daily. Let's go down to the 65-minute. I use 65 minutes instead of 60 because that gives you 6 even candles during the day. A trading day is 6.5 hours. If you do hourly candles, you end up with one candle being 30 minutes, which is a problem. And, you know, this has not made a higher high yet here. But to me, it's still starting to be divergent here because the RSI trend has started to go down, right? Also, I would look at how this chart has responded in the past to divergences, right? So, like, you know, not well, right? Like, I would expect a sell-off here, right, on this divergence, but it consolidated a bit and then kept going. And this divergence goes on for a while, so I would expect it to sell off here and then it popped back up really high. So, and made new RSI high, thus negating this previous pattern right here, right? So, like, for me, that's sketchy, and I probably wouldn't trade this until, like, this made a higher high and that higher high printed a lower RSI, right? And then it broke through this level, right? Giving me a clearer signal with more than one bit of confirmation. But I would also want on the Raindrop chart to see the candle that broke through this level look kind of like this, right? Like the second candle right here. I'd want to see all that volume kind of consolidating under this level here, right? You know, I wouldn't want to, because sometimes you'll see divergence between candles and raindrops, right? You'll see a green candle and a red raindrop, right? That's interesting to me, right? So I would want to see the volume also kind of confirm that. But you know, it's you know, my style. I've developed this over you know, almost 11 years of trading, and you know, I don't know if it would work for other people, but I mean, that's how I would look at this. Right?
I like, go to one more chart for me. Okay, go to Nike right now.
NKE, Nike.
Go to Nike on the go to Nike
wow,
on
look at this.
Go to Nike on the 1 minute.
It will not work on raindrops, so I have to go to candles.
Good. Or Heiken Aishi, one of them, doesn't matter. Let's go to candles, 1 minute. And then show me on the anchored VWAP on the 1 minute. I want to see something. If it hits the same level, I was just watching out of the corner of my eye.
So if you anchor it from the gap up, it goes there. But what like I said, I would not anchor off the 1 minute chart.
Okay, so let's anchor off the 5.
Yeah, so I would go on the 5. I would probably anchor at the low. Wow, look at that.
Look at that.
Yeah, I mean, look at that. It bounced right off and is breaking down through it right now.
Hey, now take me on the short ride. I want to see if it hits. I want to see if.
One second. I want to make sure I'm anchoring in all the right places. Nope, that doesn't matter. Like this is the kind of the art and finesse of anchored VWAP. Like this would be probably actually a good target for a short if you're going to short it, 98 level here. But that's all I would do there. So then I would go to the 1 minute here. I do not day trade, so like I would never do this. But check it out. You've got higher highs, lower highs. So you have RSI divergence, right here. It popped up and made another higher high. Actually made 3 higher highs, and here you have RSI is declining, right? And this downtrend actually continues, right, for a while on the RSI, right, all the way until it kind of starts to break down a bit here. Then here again, you have a little pop, and it pulls right back. And here, it's hard to see. You have to zoom in, but these are higher highs, or this at least is a higher high here, right? On the RSI, that's 58.74. This is 58.93. So this is actually divergent on the RSI, all by very slightly, right? So stick a line there to kind of highlight that that is just slightly, by a few points, divergent there, right? And then you have your anchored VWAP from, remove this and more precisely anchor it from the last candle here, right? You have your anchored VWAP above there, and maybe you want to anchor it from the lowest candle instead of that one. So you've got 2 of these right here. So, if you were gonna be a guy who wanted to short this, I would probably look at some trend lines, right? Just to see what the trend line levels are.
And you don't have the trend lines drawn in automatically.
So I will usually draw my own first, right? So I'm going to want to think about it a little bit myself. I do turn them on as a second set of eyes, right? So let me do that really quick, actually. And I think here we're going to have to change one setting here to ignore, right? Yeah, but that's basically what I was just drawing, right? Actually, that is the line I was just drawing there. So whatever, it confirms what I was thinking already. So I'll just double click on that to lock it. And then I'll flip trends off. And here you've got a setup, right? So, I actually don't like how it did that. I'm going to redo this one my way. Same idea, slightly different points, right?
What's the price, Dan, that it came into on the trend line and then just basically vomited from that point up? Is it like around 100 and what, 35?
Give me 1 second here. This trend line here?
That trend line, the retest of that trend line as we're heading down.
Right, it's right here. It's 96 and
no, keep going to today.
Okay.
Right around 11:15.
What trend line are you talking about? This top one?
Top one, yep. It bounces into the top.
Got it.
Yeah.
So this is like 154.
Okay, interesting. Okay, so.
Right, but that was the second point that drew this trend line. So that you didn't know about that level yet.
Okay, you didn't know about that level yet.
Yeah, okay. So that level is created here. You did know about these anchored VWAPs, right? So you did have this anchored VWAP. You saw it acting as possible support, right? And then you saw it break down below it and be unable to hold it, right? So then it kind of rallied down to the next anchored VWAP level where it's doing the same thing right now, and it broke down through that, right? In a situation like this, I would probably look for a break of this previous low. So I just throw up an alert here, right? You can't do alerts on 1 minute charts. So I would do this on the 5 minute chart, right? Or potentially on the 5 minute chart, do an alert on this anchored VWAP level, right? And then, the play would be to see, can it fill this gap most likely? But this trend line here will possibly be resistance for you, right? So, or support. So you may want to watch this level as you approach 99 bucks here. And you may want to make this your, point here, because you still, once you break here, you've still got, $3 of downside to potentially capture. So, it's a big gap up. And if it were to fill this gap, it would most likely fill it more or less completely. So, but again, I would never trade this on the 1 minute chart. Like if I were trading something like Nike, I would do it on the daily or the 1 hour because, this is a lot clearer. I currently have charted Nike already. It must have been a long time ago when I had a dark theme because I was using yellow trend lines at that point in time. But on Nike, you can see the same things happening on this longer time period, right? You have this divergent high, right? Price went higher, RSI went lower. You've got, I bet Auto Trends will pick this up nicely, right? Yep. So you have a strong uptrend, sharp uptrend that broke, right? And price could not recover it. And no matter how you draw this trend line, you're basically below it right now, right? And you know, you've got potential support all the way down here. So like I would throw a fib on this chart, see where the fibs take me. Turn that on, right? Yep, you know, it's struggling to get over the 382 level. You know, there's some confluence down here. So I would, you know, potentially, if this were to rally anymore and retest this area up here, I would potentially, you know, consider a put, right, to ride it down here. Because I have what I need, right? I have a trend line break, I have a divergent, you know, higher bottom, and I have a target level, right? I might want to test out anchored VWAPs a bit here. So, you know, okay, that's interesting. Throw a few up here. Look at that, boom. Right, so you pop one on this high and it literally provided support right here and here and here, right? Like if you get rid of this trend line, right, you don't even need it. Like it couldn't get over, gapped above it, very slight, but tiny little pop up here. Tested it with a really kind of crazy looking doji or whatever that is, long tail doji, right? Flew from there, made a divergent high and pulled back directly to it. That actually kind of is bullish to me. You know, I don't know. So like what I would do is create an alert on this, right? And I would not be bearish unless it broke below it, you know, and I would probably create an alert on this fib level here. And, you know, if I wasn't already in it, consider getting bullish when it started to confirm that it wanted to go higher, right? You can also anchor from this gap here, which will give you a similar level, probably a slightly better one, right? You can see how it's a little more precise there, here as well, right? And just play with it, right? Anchoring is kind of an art.
You're just anchoring. You're anchoring from a gap. You're anchoring from a swing, a substantial swing high, a substantial swing low.
Bingo. I'm just doing it a bunch of them and seeing which ones look the best, right? Which ones price is respecting the most. Very soon, I don't want to say very soon, but sometime soon, we plan to add an automated feature. We can just push a button and I'll do that for you. And
So
then you just delete the ones you don't want.
We'll automatically do it, right?
Yep. And you just go through and delete the ones you don't want.
So basically it's going to be anchored. So this is what I love what you guys are doing, okay? Because it started out as trend lines, right? And now it's like really becoming, it's picking up. The thing that you showed me with those volume bars are insane. I mean, picking up where the majority of price is and levels and so forth. I mean, it's really what the institutions are using, you know?
Yeah, it is.
You know, you sometimes look at a chart and all of a sudden, you know, you're looking at something and it's so far below the moving averages, but yet it stops on a dime and reverses and goes on a $2 run. And you have no idea why. And you think to yourself, you go back on the daily and you try to find a line, you try to find this, and you put those volume bars in there and you see exactly why. There's been so much price action down below.
Check this out. I mean, this is Uber, right? First off, I anchored at the high here, right? On Uber, since it's a recent IPO, you can also anchor on IPO day. And that's the ultimate status quo change, right? And check out what happens. First off, the high anchor served as resistance all the way here and here, right? The one from the IPO.
Where'd you anchor it? At the tippy top right there, sometime July 1st, right?
Yep, so this is July 1st. This one is kind of bold right now, right? And when price broke above this, it went on a tear, right? I anchored from the IPO day and from this bottom here, they kind of came in close together, but these two are acting as support right now. Right, and this very bottom tick one that I anchored here, actually I did that a little off. But this one I did here was perfect support here. Right, so almost like it's just play around with it and figure out where you want to anchor, you know, and you know, each chart's going to kind of have a, you know, a feel to it, a style to it. You know, you could in theory anchor from this kind of gap up weird one up here. Right, I don't know what this candle is, but you know, and you can see that one was powerful, right? That acted as resistance, and support. Once it broke above it, it, you know, dipped below it and went flying.
And these will carry over to the 5-minute chart, to the 1-minute chart as well.
As long as the anchor point is visible on your screen, it will carry over. Otherwise, you have to use MTFA. Right. So when I go down to the 5-minute chart, since all those are anchored from the daily, they're not visible right now. But if I go to the daily MTFA, you'll see that they'll appear. Right. You can see, the closest one is down here, right here. So yeah, man, it's super super fluid, and it's all integrated together.
Yeah, it's amazing, man. I'm like super. The more I go and the more I research it and the more I talk to, Jake and yourself, it's like the more impressive it is, because it's really designed to make trading as easy as possible. And what you just, taught everybody today was, and if you look at it, these are clean charts, basically using the anchored VWAP. And but we both know that funds and big institutions, they want to buy, they want to sell. They want to sell when it hits the VWAP and goes back down. They want to buy and they want to keep their price above the VWAP, right? So,
yeah.
So they're protecting those prices, and that's what they're being judged on. There's so many things, and it's almost algorithmic, and it's figuring out, really playing it at their own game, because if you have these levels, you're playing different levels. And if you have a cleaner chart, and I'm sure the Heiken Aishi candles show up just as well, it doesn't matter the candle, but
Yes.
when you have that clean chart, you see so much more.
Yeah, I agree, man. It less is more, right? And simple indicators can be unbelievably powerful. Like the VWAP is nothing too fancy. It's a volume-weighted moving price average, right? Volume-weighted average price. Anchoring it to a specific point in time makes all the difference in the world. And very few people understand the concept of status quo changes, pivot high, pivot lows, or whatever, swing high, swing lows. But like, if you think of the psychology of it, right, like that is a status quo change. A lot of stops got taken out. There was a lot of capitulation, and the blend of traders and participants in that asset has changed, right? Their levels have changed. Everything has changed when those events occur from a technical point of view. So if you just measure like the volume weighted average price from that point on, you get a very interesting level. So I hope that's interesting. We have a lot of really cool volume tools, as you can see. Anchored VWAP, anchored volume by price, raindrops are all volume visualizers. They're by no means the only thing that TrendSpider does, but they are some of the most popular and coolest features that you really can't find anywhere else. So I'm happy you like them, man. I really appreciate it.
No, they're amazing. I told you before I found you guys, I bought TradingView a year ago, and I got an email from them, and I was like, I immediately, it was renewing, I think on the 5th or 6th, and I turned off the automatic thing because there's no reason to use it. I'll use Thinkorswim because that's what I'm trading off of, but I've got my 2 other screens up with TrendSpider, and now I'm going to change them to exactly what you use because no need to have the moving averages. If I have the moving averages sitting there on my chart with Thinkorswim to take my trades, I can then use these amazing features to get even better entries and just sit there and wait for the entries and do the scanner and everything else. And I love the way it's looking. I mean, and Nike, by the way, bounced off of that level. It's now up to 100.9. Go back.
Did it bounce? Let me pull it back up.
Yeah, go back to Nike and show people. And people are wondering, well, it's a double bottom as well on the intraday chart today, but we had it nailed on right there. Look at that.
Yeah, right here.
Right there. Look at that nice double bottom showing up.
Yeah, and I mean, it's approaching this level right here. So like, it'll be very interesting to see if Nike can get over 125 or so.
Yeah.
And if it can, I mean, this is forming like. I mean, it's breaking out of trend line resistance right now, right? So that's very cool to see. If it, so then you would do something like this, right? You got your kind of triangle here. And then the next thing you want to do is get confirmation that's really breaking out. This VWAP gives you that really well. Like I would just watch this level, 123 or so. And by the way, is this divergent? Let's see. Yes. So we have a lower low on price, and we have a higher low on RSI, and a PPO confirmation on this. So I mean, this could, like on the 2-minute chart, it could you know, move up. So like, I guess next thing is like, how high do we think it'll go? Right. So we can use some fibs for that potentially. Reverse the fib. Like this stuff. Right. You know, and I mean, you can say, you know, you could safely say it gets over 100. I mean, potentially, you know, get over 140 here. I would do this on again, I wouldn't do this on a 2-minute chart. I'm just not used to trading like scalping.
Right.
So these numbers seem like, why would you go into a trade for that little of a move? But I get the concept of it. I'm curious, is it going to pull back now? I think it is.
No, I think it's interesting because I looked at the corner of my eyes and I saw it up on the chart and I was just like, wow, look at this. It's like we kind of talked about it and then we talked about it going higher and then it happened to form a double bottom. And then sure enough, it broke through the trend line. So it was a really good way of people seeing the power of the software.
Definitely. All right, cool. Well, you know, I'm happy to, I think I've covered all of it. Is there anything that you want me to go back over or touch on?
No, I think that was awesome. Now you've got a special coming up too, don't you?
Yeah, thank you for reminding me. We do actually. We have it going on right now. So you know, it's we just launched a new scanner, and all of the 30 pre-built scans today officially. It's been available to some customers for last week for testing, but it's officially live now. It's officially available. So you know, we're doing a promo, right? You get 7 days for free to try TrendSpider, to play with it. You get free one-on-one training if you need it. You can always get it. You can do it during your free 7 days if there's available time on the schedule, or afterwards, or as many times as you need. And if you choose to renew TrendSpider and support our work and, you know, become a customer, we're offering 25% off your first year. And that works on both monthly plans and yearly plans. You can pay monthly and get a discount, or you can pay yearly and get 2 discounts, one for paying yearly and one for using the coupon with this offer. But you know, I hope everybody who's watching can see the power of this. If you've ever spent time looking for trades, right, just like looking on Twitter for trending, looking on stock Twitch, trying to figure out what symbols are moving, you know, social media, whatever it is, you know, it's hard to find moving stocks that before they move. It's easy to find them when they're moving or after they've already moved because everyone's talking about them. But finding stocks that fit your conditions, right, is really, really tough. And the idea behind the scanner is to make that easy, to let you set up a trade, set up conditions you want, you know, search the market for whatever those are, generate a watch list, and dive right into them. And once you have a watch list, you can create alerts, you can back test, you can chart, you can do all kinds of stuff, use pattern recognition, you know, use all of the cool features that are there to make your life easier as a trader. So I hope everyone liked it, and I hope everyone wants to give it a shot. Thank you for having me on.
I love supporting you guys because it's really, you know, to me, it's, you know, I always tell people, if you want to find a business that has the lowest point of entry, meaning the lowest fees, you're never going to get a better, you know, of course you got to have some capital and so forth, right? You know, but you could buy 1 share nowadays in practice, 2 shares, 3 shares, because you're not paying, you know, you're paying, you know, small exchange fees and that's about it because everybody is now in unlimited trading. So it's a really good thing to use, but you do need the power of software behind you. And that's why TrendSpider is amazing. Dan, hang out and I'm going to say goodbye to you properly. For the rest of you all, have yourself a great day. This was a nice long podcast, so enjoy it. For those of you that are listening to this podcast, I strongly suggest you go to YouTube and watch the podcast because you're going to miss all the explanations. So if you're driving in the car, you can listen to this once and then go to YouTube and play it again. This is something I suggest you play 2, 3, 4 times so you get an idea of really what is going on. Dan, hang out. I'm going to say goodbye to you properly, okay?
Thank you for having me on. Goodbye, everybody.
My pleasure.